I'm Greg Hunter. Welcome to USAWatchdog.com. Well, as a regular guest of ours, we haven't had him on for a while. I hate that, but I love it that he's back on. He has got a lot of Wall Street experience. He's a prolific writer over at JS Mindset. His business partner is Jim Sinclair in the Holter-Sinclair collaboration at JS Mindset. I'm talking about Bill Holter. Bill Holter, thank you for joining us today on USAWatchdog.com.
Thanks for having me back again, Greg.
I want to start with this chart that is titled "Chart of the Century." I'm just going to hold it up here. This is a chart of showing gold, and let me get right over here. There we go. Showing gold, what the price was relative to the monetary base. So you can see the price of gold at $20 and 67 cents an ounce here, and back in the 20s. It goes all the way back to the 1920s. Okay. So gold was $20.67 an ounce, and then gold actually relative to the monetary base, the price of gold went down. Then it spikes up here in 1980. This is $8.50 an ounce, and so gold it makes up for how much money is in the monetary base. And then this other bizarre thing happens since 1980. It goes down, 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 down. That represents about 2000, year 2000, 2001, where it was $250 an ounce, about a little bit more than that. And then now it's even a smaller amount down here. Bill, what does this chart mean?
Well, basically, it's a function of the amount of dollars outstanding, if you want to call it that, versus the price of gold. And what the chart is showing is that gold at 1340, 1350, in relation to the monetary base, is far cheaper than when it was $20.67 in the 20s. It's cheaper than the $35 peg that they had from 1933 to 1971. And it's cheaper than gold was in 2000, 2001 when it hit $256 an ounce versus the monetary base. In other words, they've flooded the system with dollars. They've diluted the dollar to the point where $1,340 is actually a grossly undervalued number versus the monetary base, versus the price of gold in the monetary base. The punchline to this is the system has never been riskier, more leveraged than it is today. Yet the price of the cost of your insurance has never been cheaper than it is today, with the exception of late last year, October, November, December.
Well, what about all the rehypothecation, the pledging of gold and the multiple owners of the gold? What about all that? If you add up, they printed a ton of dollars, and then there's more fingers, electronically wanted to touch that bar of gold or that ounce of gold. What about that?
Well, that's the other side of the equation. They've purposely diluted the price of gold in order to portray a strong dollar. So basically, if you take 1 ounce of gold or 100 ounces or a ton or whatever, and you lend that out 10 times, it gets lent to someone, that gets lent to someone. So now that 1 ounce is 10 ounces. So what they've done, and they're doing this with COMEX, I mean, you've seen where they were 300, 400, 500 ounces for every 1 ounce in the registered category. They've diluted the price. They've purposely pushed the price of gold down to portray a strong dollar. And the reason they need to portray a strong dollar is to continue confidence in the system. It allows dollars to continue to be accepted. It also allows the U.S. Treasury to turn around and continue to borrow. Although that's not working so well because the Federal Reserve has had to step up and actually buy major portions of auctions.
I want to talk about that. This may be a great time for investors, but it also is a dangerous time. I mean, what is this forecast for the future prices of gold and silver?
Well, as you know, I mean, I've written so many times, I believe we're going to have a reset of the system, a reset of basically of all currencies, all bonds, all interest rates, stocks, commodities, gold and silver, etc. This is a very, very dangerous time. One thing we should talk about is that the central banks have now stepped in and started buying stocks. And since Brexit, the Central Bank of Japan has become a major buyer of U.S. equities to the point of they are now the largest holder, the largest single holder of U.S. equities.
Wow, that's stunning.
The Swiss National Bank has what, a $62 billion stock portfolio. I mean, the punchline to that is that U.S. stocks are backing foreign currencies. I mean, what kind of foundation is that? Another big central bank is the Norwegian central bank. They're buying stocks, and they're trying to support the market, the equity markets, and continue with the confidence, because confidence is the only thing that's holding the system together.
Can they lose it? What could cause this whole thing to fall apart? I mean, it just seems to me crazy. You're taking all your printed money and you're buying, stocks, and just to prop the market up. I mean, what could go wrong, and how could it go wrong?
We don't have enough time to talk about what could go wrong because the list is way, way too long. The most obvious thing that could go wrong is that you get a major financial institution go upside down and default on derivatives. The most likely, and we've talked about this before, the most likely would be Deutsche Bank, and you would probably see some type of bailout by the Bundesbank. But would be the most likely event, is you get a major financial institution or a bank that's a big player in derivatives to go upside down. Interesting, while we're talking about derivatives, Warren Buffett just completely, as of yesterday I read, he is completely out of derivatives and has zero derivatives exposure. So that's got to tell you something.
Is this what Jeffrey Gunlock, and you can add basically with his actions Warren Buffett to the list, and Bill Gross, Gunlock manages $100 billion, sell everything, buy gold. Bill Gross in his investment letter, Barry's at the bottom, you should buy, it doesn't like bonds. I mean, the bond king doesn't like bonds anymore.
Right.
Is this what all these warnings are from Carl Icahn talking about the system blowing up? Is this what this is all about? Can you explain? Is this what these guys are saying? Because they're not really explaining why they're so freaked out. They're just coming out saying, "I'm freaked out. Buy gold, sell everything."
Right. That's exactly what they're saying. You have to read between the lines, but just understand they're getting out of anything leveraged. They're getting out of the stock markets. They're even Sam Zell has been liquidating his real estate portfolio. They're getting out of risk and moving into real money. And real money is gold. And they're getting into what in the old days was cash. They're getting into real cash.
How are these guys? How are these guys able to buy the kind of gold that you'd need to make a difference in $100 billion portfolio or a $50 billion portfolio? How are these guys getting the gold? Or they can be stupid enough to buy SLV and GLD? Are they?
I've read where several have bought GLD, but when you're talking about GLD, institutional clients are able to turn the shares in and turn it into gold, and that's assuming that GLD has the gold. I'm not so sure that's the case, but they are also, just look at what's happened to mining equities this year. They are also moving into mining equities. George Soros, for example, has a fairly large position in mining shares, and that's one of his hedges. And just look at what's happened to the mining shares so far this year. And that's why.
Is there any reason to hold cash? I know for little people you need, you need some cash to function if this thing blows up. Bob Moriarty brought that up a long time ago about cash, which one of the things that he said that I actually really agree with, it's going to work really good for a short amount of time, but so is gold and silver if you're going to store wealth. So is food, water, ammunition, a good running car, a house that's paid for. I mean, are we getting ready to go into Mad Maxville?
I think it's probably better than a coin flip that that we have a societal breakdown. You're asking, should you hold cash? I think we've spoken about this before. My opinion is, yeah, you should have some cash, very little bank balances because that's going to go away. But I believe you're going to need to have some uh, physical cash, which will actually, for the first week, 2 weeks, maybe a month after the system shuts down, will probably become more valuable. In other words, the dollar will actually purchase uh, more real goods for several weeks simply because if the banks are closed, nobody has cash, cash all of a sudden is scarce. And that'll work until all of a sudden the light switch gets flipped and people understand cash has no real value. And people will say, I'm not going to trade real eggs or tomatoes or whatever for dollars. I want something real for something real. And that's where your dollar collapses. Late in, I think it's the September 30th, September 29th or 30th, there is a IMF meeting, and I believe you're going to see the yuan become a fully functional part of the SDR. And that's a big step backward for the dollar.
I was glad you wanted to talk about that. I mean, they're going to announce something in early September, but the fireworks apparently happen at the end of September, beginning of October. What are they announcing, and why is it going to be a big step back for the dollar? Explain.
Well, because it will be inclusion of the yuan.
In the SDR, the special drawing rights. Is that right? Special drawing rights? Yes.
Exactly. And whatever portion the yuan takes, what's the number? Is it going to be 10, 15, 20%? I mean, I don't know. But whatever slice of the pie the yuan takes, the other currencies lose. And I would think predominantly it'll come from the dollar.
Oh, well, they're talking. I've heard a couple of different ways they're going to devalue the dollar, that they're going to devalue it, 30%, and then 30% again is what one theory that keeps popping up. That would be roughly a 50% devaluation of the dollar. What say you about that kind of scenario?
That's very possible. And it could be deeper than that.
But what about all these bonds? If the dollar all of a sudden gets devalued in the basket of SDRs, aren't people going to sell treasury bonds? I mean, aren't people going to wind up and go, I'm going to pay back with dollars that are worth a whole lot less than the dollars that I put into this, 10-year treasury or 30-year treasury? I mean, aren't people going to sell?
Right. You would think that would be the result. Just from the currency standpoint, and plus you're looking at 0%, 1%, 2% bond rates. So foreigners, especially foreigners, will be stepping up to sell bonds because they don't want further valuations. And that's going to start a vicious cycle where the Fed is going to have to be the buyer of last resort of U.S. Treasuries. They're going to have to support the U.S. Treasury market. And how do they do that? They do that by expanding their balance sheet, increasing the monetary base, increasing the money supplies. In other words, diluting the dollar even further. So selling of treasuries is going to actually cause further devaluation of the dollar because the Fed will need to step up and sop up that supply.
And you're so kind to kind of lay this out for us about the devaluation of the dollar and the huge leverage with these, foreign central banks buying stocks like Japan, buying the biggest single holder of stocks. Well, what could go wrong? You're saying that this is what Gunloch and Icahn and Soros and Buffett and Bill Gross, you're saying, without them saying it, this is part of their equation why they're panicking and freaking out.
Of course. It's simple math. It's simple logic. They know it. They know what's coming.
I got it. And then what about the retirement accounts? I mean, we've been at 0% or near 0% for a long time. They're supposed to get 8% return or something like that. What's going on with retirement accounts? If the market crashes, doesn't that underfund the retirement accounts even more than they're already underfunded?
Right. They are, by and large, retirement accounts, whether they be corporate, state, even federal, look at Social Security, they are underfunded and mathematically cannot cannot go uh, 20, 30 years. I mean, somebody who's 20, 30 years old, their retirement plan will be defunct before they start to collect. Uh, One thing, retirement accounts have been forced to take more and more risk, and that's because interest rates have gone down. What used to be in the insurance industry is they would buy bonds, and many pension plans used the assumption of an 8% growth rate. And then all of a sudden interest rates started coming down. So new money that was coming in was only getting 5%. And then it was only getting 3%. Now it's only getting 1 or 2%. So these pension plans have had to go out and buy stock. They've had to do things, they've had to do take risky actions. They've had to buy risky assets in the hope of getting the 8% return because they can't get it in, quote, something that's safe, the bond market. This is mathematically going to blow up. This is not an opinion, and this is now just something that people are starting to talk about just within the last maybe 30 to 60 days. I mean, yes, we've talked about it for 10 years, 20 years, but now we've had 0% rates for such a long period of time that these portfolios are now truly becoming lopsided, and they're becoming equity portfolios. They're no longer foundational or debt foundational portfolios.
Well, that could turbocharge the underfunding. I mean, you get a 50% sell-off. I mean, Jim Rickards was out saying that, and he wasn't the only one talking about a day. Bo Pony is his math, and Greg Manarino. There are many people out there say, we could have the same type of percentage drop, 500 points back in '87. Well, that would equal 4,000 points today. That could happen. So you're saying that we could get creamed in a hurry, couldn't we? Couldn't those funds get creamed in a hurry?
Yeah, that won't happen. I don't see a 4,000 point day.
Because of the plunge protection team.
Well, not the plunge protection team. They'll pull the plug. They'll just pull the plug on the market. They'll shut the market down and try to reopen it the next day.
Oh, that'll be healthy. that'll calm everybody down.
Could you have 4,000 points or 5 or 6 in a week? Yeah, I suppose that's possible. But you'd have the market opening, closing several times a day, close for the rest of the day, and then try to get it open the next day. I don't think a 1987 type of event is possible with all the circuit breakers. That's the first thing. And the ultimate circuit breaker, there's a computer glitch. We're going to have to close it down and wait till tomorrow. And they did that, what was it? The Chinese market did it last year. So that's definitely something that will be done.
I got it. Okay, and what about the geopolitical? I mean, this cloud of financial hooey, dung, whatever you want to call it. It's not good. It's not sunshine and rainbows above us. This is under the South China Sea. This is Turkey warming up to Russia, and the relations with the U.S. never being worse. I mean, they're blaming their coup on the U.S. and the CIA. There are things over in the Eastern Europe, and Russia reportedly, supposedly putting tanks on the border, and the U.S. putting tons of NATO, putting tons of equipment and machinery, having war games, missiles, the whole deal. I mean, the whole world looks like it's just about ready to, if somebody just flicks a cigarette butt, I mean, boom, we could have a mushroom cloud surrounding the whole world, right?
Right. The U.S. has pushed for years, 5 years, 10 years, to try to stir the pot and basically deter attention from the problems here within the U.S. It's my belief, I mean, I've believed this for a couple years, that the Chinese are the ones who are the stubborn longs in the silver market. And I believe, I wrote that it's like a kill switch, more or less holding the U.S. hostage with, for instance, with the South Sea Islands. If we were to do something there, these longs, which I believe are Chinese, will step up and say, deliver me the silver, which doesn't exist, and they financially default the U.S. That would spread. I mean, a COMEX default is not a U.S. default, but a COMEX default would spread overnight, and within 2 days, everything would be closed. So, Yeah, we have our fingers in every pot, and our fingers are dirty.
Oh, we talk about the Comex default. There's people out there that say, well, they can never default; they'll just pay in cash. And what you say, and I believe you and Jim Sinclair. They'll only do that one time. That means the market's gone after that, right? If they
Right.
have enough money to pay for that, cash settlement, right?
Well, of course they have enough money to pay for the cash settlement because it could just be printed. That's not a problem. And whatever the trolls want to say that a cash settlement is not default, it is default if the long who is standing demands gold and says, I will not accept cash. That is a default.
I mean, that's a feature of the COMEX, right? They're supposed to deliver bullion. I mean,
Right.
so if you pay cash and then you open the next game, okay, I'd like to buy some gold now. Okay, can you deliver it? Oh, no, 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 we can't do that anymore. We're only going to pay you in cash. Well, then you don't have a bullion market anymore, right?
Right. And that would totally undermine confidence because you're looking at there's not enough gold or there's not enough silver.
Prices would skyrocket.
Prices would skyrocket and supply would go into hiding. This month for August, by the way, there's 45 tons of gold standing for delivery, uh, and the initial standing was 45 tons. It dropped down to 42 tons, and again, it's starting to grow as the month goes. Just like the last 3 months or 4 months, the amount standing initially grew and grew and grew. So we very well could be 50 tons or more by the end of this month, and we don't see evidence of full deliveries going back 3 and 4 months.
I know you really watched that. Could we come into a perfect storm now that you brought this up? And I want to circle back around to this about 45 tons standing for delivery. I mean, it's probably going to get worse in September. I suspect when they put the yuan in the SDR basket of currencies. Is that going to be a proximal trigger point? I mean, could we have it right then and there? Could it be right there, then and there?
It could be any time. I mean, obviously that's likely. What I'm going to tell you when you say a perfect storm, we are entering a perfect storm in every facet of our lives. This is not just financial. This is social. This has to do with the breakdown of the rule of law uh, in the U.S. and I guess globally. You can look at it as a breakdown of morals. I mean, society is breaking down, and what is being done is you've got false economic numbers supported by the press telling the people all is well, and you're seeing, uh, for lack of a better term, revolt all over the world. Brexit was a revolt. Donald Trump running for president is a revolt. Uh, you're you're seeing people get truly pissed off because they know something is wrong, and it's a worldwide phenomenon.
And the media, I'll tell you, I came from the mainstream media. And when I was there, they actually had investigative reporters like me, and I did all kinds of stuff. I mean, I'm not saying it was perfect, but now, I mean, what they're doing now. I mean, op-ed pieces in the New York Times justifying that reporters have to throw off their objectivity to fight Donald Trump. Well, then you're not a reporter anymore. Then you're just a political hack. Same thing, op-ed pieces on the L.A. Times. I mean, it's over the top, saying basically that reporters are no longer objective. That means they're political hacks. I mean, the cheating, the lying, the false stories, the false narratives. And the only reason why I like Donald Trump is because everybody hates him. I mean, but about what they're doing to him is so unfair. It's off the charts. I mean, Melania Trump's out there saying they're scared. That's what I think. They're scared. What do you think about all the lying? I mean, it's total lying, and they're proud of it. They're writing about it. They're doing op-ed pieces. They never did that before. They're proud of the lying and the one-sidedness and the political hackery. What do you think of that?
Well, basically because Donald Trump is telling the truth. The man, the average person on the street can sense, can feel, can see that what he's saying is true,
That's right.
and they can sense, feel, and see that the economic numbers coming from the government, supported by the media, are complete bull.
Rigged.
Yeah, rigged. That's the word. The system is absolutely rigged from top to bottom. I mean, look at, my guess is probably Trump is leading by 10, 12, 15 points in reality. But what you have is you've got polls that are being released that will support the rigged election.
I don't know if they're going to be able to pull that. I don't know if they're going to be able to pull that off. We'll see. I mean, I hope they can't pull it off. But it's done state by state. It could be a landslide all across America, and they won't be able to rig against a landslide. I don't know.
That's if we.
I hope it's a fair election.
That's if we have an election, Greg.
You think this stuff in September could blow us out of the water? In September, October, we could get into some serious sucking sounds in the economy. Is that what you're saying? As Ross Perot once said.
Yeah, I've said for several months that I believe a truth bomb or truth bombs could be dropped, and you get absolute rioting in the streets.
You did say that. And we got the truth bomb from WikiLeaks with the DNC and basically rigging and screwing Bernie Sanders out of the nomination for the Democratic. I don't believe with a lot of his policies, but he and his voters, millions of voters got defrauded out where they committed fraud, right? I mean, you said there are going to be truth bombs. That's one of them.
But under a martial law scenario, there won't be an election.
Oh, boy. I hope it doesn't get that bad because, wow, that just says something. Bill Holter, the JS Mindset, prolific writer, you have a paywall. Tell me about how you're doing this. I still go on there and see free stuff and see articles like this one was free to the public, the chart of the century, which is excellent work by you. You're a prolific writer. Tell me about how you guys work that.
Typically, I write 2 to 3 articles per week, and that goes out to subscribers. Jim and I cross-interview each other. As you know, you interviewed us a few weeks ago.
That was a lot of fun.
Yeah, it was. Jim and I cross-interview each other once a week, and that goes to subscribers. I generally write 1 or 2 public articles per month that I send, put on our free side of the site, and also goes out to all the websites that have posted my work in the past.
It's not very expensive. How much does it cost?
It's $119. That's going to go up, I think, $10 or $20 shortly. But it's $119 for the year. Just listening to Jim in the weekly interviews, that's worth the price of admission right there.
Well, you too. Now, don't sell yourself short now. I mean, he wouldn't have you as a partner if you I don't think Jim Sinclair surrounds himself with dummies. So.
Thank you.
Don't sell yourself short. Listen, we'll put a link to the site, at the bottom of after the interview section for you YouTubers out there and all you guys. Put up your pay thing or your thing. You don't have to. You can get free information from it, which I think is smart. But anyway, Bill Holter, thank you for joining us today on USAWatchdog.com. Always very informative, very great. Thank you so much.
Thank you, Greg.